right. How are we doing here? Okay.
Hey everyone, so I have BC here. He's going to be giving us his market analysis. I've been excited to talk to him. It's been a while. We haven't connected to see where the markets are, what his opinion is. Are we going, up, down, just all the different scenarios that are involved with the markets because you can't really rely on one scenario. You do have to look at everything as a whole. So, BC, thank you so much for coming on today. I appreciate it.
Oh, thank you very much, Pi, for having me. It's exciting. We haven't connected in a couple of months, so
Yeah.
we haven't really had a chance. We've been really busy, but it's nice to always get together and go over the markets and share our thoughts and ideas and see where things go. And it's even nicer when you look back a couple of months later down the road and you kind of look back at your videos, look back at the analysis, and see what hit, what didn't hit, and
Yep.
glean from it and learn from it.
Yes, 100%. Summers are always busy, so I'm glad to connect now.
Yes, yes, absolutely, absolutely. Did you want me
So,
to do a screen share and I can maybe cover Bitcoin?
yeah.
Okay, great. Let me go ahead and just do a screen share here. And let's see here. Let me find I have multiple screens. Where is my, give me 1 second. It's not showing me my main screen. I thought this one right here. Here it is. This should be it. Huh. Do you see my chart?
Yes, I do.
You do? Okay. Is it the one that says double top right here?
Yep. The
Okay,
double top.
perfect, perfect. But I have multiple monitors, so when I go to do the share, it brings up all the tabs within those multiple monitors, so it gets a little confusing. All right, great.
Oh,
So
trust
if
me,
you
I know. I
guys
got
are
like 50 tabs.
okay, all right, great. So right now, presently, what I'm going to do, guys, I'm going to do a short-term analysis on Bitcoin and what I'm looking at for the short term, and then I'm going to do a macro view on it and cover what I feel may happen in the market. As you know, this isn't financial advice. This is just two people sharing their opinions, trying to figure out some direction and make sure that you trade safely. And if you're not sure how to trade, make sure you stay out of the market. But this in no way, form, or fashion am I trying to influence you into buying or selling at any time. So with that being said, looking at the 4-hour time frame, this is a chart that I've been following and I've been posting not only on Twitter but on my private Discord as well, is this double top. So I've been looking at this double top formation when it started forming out, and we got a little bit of lag right inside of here. And this is very typical. And the reason I say that is because this is a extremely bearish pattern, especially on a 4-hour time frame. And one of the things that you always have to remember is that you're playing against the house, and the house is not going to make it easy for you. It wants to shake you out and wants to cause doubt because they don't want to hand over their money. So watching this consolidation here on this neckline even gave me some pause, to be honest with you, because this type of pattern breaks down more often than not. But the way this was behaving and the way these wicks were getting bought up was starting to make me even doubt that maybe this time it's different. Maybe this time it won't come down incomplete. And sure enough, this morning we get that flush out. And the interesting part about this, guys, is that during these wick events here and this consolidation, the longs were actually starting to stack up. So that goes to show you that this was working. This stuff that the market makers were doing was doing exactly what they intended to do: cause doubt that it's going to fall, give you confidence because of the consolidation here on this trend, on this support line, that there's a good possibility that we're going to go up. You looked at Twitter; a lot of Twitter were saying, "No, we're going up. Get ready. It's going to take off at any moment." And then we get this massive 2.11% candle to the downside, which is a big move for something as big as Bitcoin. For an altcoin, it's not that big of a deal, but for Bitcoin, it definitely was a substantial amount. It was $421 drop in just one 4-hour candle. And then we get some follow through with this candle. Now, everyone's $1 million question is, well, what happens now? Well, in order to figure that out, what I like to do is I like to zoom out a little bit. This is what I did here on this particular chart. And I found an interesting trend line, which is this trend line right here, where we've been finding support. So this trend line here and this heat map, do you see the trend line?
I see the heat map. Yep.
Do you see
The
this
heat
white
map.
trend line here?
Uh-huh.
Okay, perfect. So I went to the heat map and I try to
Your
see
cursor's not
where.
showing up. I think that's what's throwing me off.
Oh, okay. All right. I went to the to Trading Light and I went to the heat map software that I use and I found the only liquidity that was directly below the current price action was right here at 19,069, and that was the
Mm.
nearest one. So when I chalk that on my chart, it ends up being right at the support line, which is normally the end of this double top. So there was confluence there that gave me the confidence to call this a short-term target. Now, with that being said, these heat maps are not a leading indicator. So all it basically says there's a lot of liquidity here. Now, when there's a lot of liquidity in any given area, the price action likes to go and tap that liquidity. So if everything works out the way it normally does, we can get a potential tap into this liquidity at about 19,069, which lines up to Castillo Trading. He's got an MPOC level, I think, right around here at 19,129. So really close to this heat map. So that's great. Also, when I do an analysis and I map everything out, I also like to go to traders that I respect that have a very good track record and see what they're coming up with. Castillo's style of analysis is much different than mine. However, we came to almost the exact same conclusion using very different metrics. And that is what I like to see to give me the confidence and validation that my analysis is on track. Now, one of the things that could happen here is we could get front run. So we are really close. I mean, we tapped this wick here, which gave us let me see here. That's only 1.31% away from the actual target. So we could very well have already been starting getting front run by this wick. If we zoom out to smaller time frames, maybe we can get some clarity. Okay, we're here on the hourly time frame. When I zoom in, I'm now looking at a potential bear flag. So when I see something like this, then I can say, hey, you know what? I'm going to pause and think that maybe the front running idea, I'm going to put that in the back seat for now, because this bearish pattern is basically going to help us identify that there is some more move to the downside. And a lot of people, when they see this, they automatically think, okay, they're buying it up. You have to understand and identify market structure. I can't tell you how important that is as a trader, to take the time and understand so that you could not fall into any false moves that the market makers may do, like looking at the 4-hour time frame, seeing this wick and automatically think that we're pulling up. When we zoom in to the hourly, you can see this bear flag. And if you zoom into the 30-minute, you can see it in greater detail. So you can see a really nice bull flag forming here on the 30-minute time frame, just like we did up here. Look at the way we came down here, bear flag, breakdown, bear flag, breakdown. So what this is doing, I like calling this a stair step. The same way we see a stair step to the upside with bull flags, we are now seeing the same exact market structure to the downside with bear flag breakouts to the downside. So we're only 1% away. So I would imagine one more breakout, we tap the liquidity in here, we hit that MPOC level that Castillo has posted on Twitter, and that should give us the confidence to start opening some longs. I have been personally scaling in at this level into my longs, only because I've experienced many times where you get front run. So I'm not looking to fish the bottom. I'm okay going 1% or 2% above my initial target, scale in. And if it comes down and taps it, I can always go in a little bit heavier to make up for those higher buys, dollar cost average that entry down, and it really isn't that big of a deal. But what I don't want to do, I don't want to get front run and then have to chase that front run, because then it becomes, you start exposing yourself to higher risk where you don't have that buffer anymore. Because even though we think that we're going to go higher to tap some liquidity up higher at the 20,500 level and at the $21,000 level, it can turn around. And if it turned around and you went in too late by chasing those candles, what happens? You now remove that buffer you have and you get underwater very quickly. And depending on how you manage your portfolio, those percentages could start adding up very quickly, and especially those dollar amount could add up very quickly. So that's why much rather do a daily cost average so I can at least cause an anchor is what I like to call it. So for instance, if I buy here and we go down, great, I grab it. But if it goes up, when I buy it higher, my initial purchase at the bottom now creates an anchor and it brings that price automatically lower than I'm actually buying it, giving me
Yes.
again that buffer that I need for usually the first 4 to 6 hours is where it's the most crucial part of a trade in a day trade scenario, because that's where you're going to get your buffer. If you buy it where there isn't too much room, then you're going to really have to pay attention and stay on top of that trade in case it doesn't work out the way you want. And it's very difficult to put a stop loss in that area, because with all the volatility that we're having, you can easily get stop hunted. So I typically don't like putting stops right away on my trades. I like putting alerts when we get into a nice buffer, maybe 3-4%. I will then start applying a stop loss at scratch, so that I reduce the risk of getting stop hunted. And that's something that unfortunately is very prevalent in our industry. You hear many people complain about it, getting stop hunted all the time. And all it takes is one wick. And those are the most frustrating ones, because they come down, they take you out of the trade, and they go right up to where they left off. And you're again chasing that candle if you want to continue on that trade. So for right now, guys, because of this fall, I feel that if you look, I'm gonna switch over to the ES real quick, because I've been following ES and broader markets much closely now, as that correlation between Bitcoin and broader markets has been really really tight late in the past few months. I think more so than before. And as you can see, ES is falling. Broader markets are closing in about an hour, and I've noticed that in the weekends when broader markets close, it almost is like a release for Bitcoin and crypto to finally start running on its own. So with this fall that we've been having, I feel like this fall is going to allow us that flush out and reset of oscillators. Because if you look at the RSI on almost all time frames, give me 1 second, let me open up the time frame. Look at the 15-minute time frame, we're oversold. 30-minute, oversold. Hourly, oversold. 2-hour, oversold. 4-hour is not completely oversold. It's 5 points away from being oversold, but that goes to show you how much we have fallen, that from the 4-hour all the way down, we're in oversold territory. Typically, when we see oversold indicators for that many time frames, there's going to be a bounce coming. And the fact that it's falling right on a weekend, an hour before the broader markets close, I feel like we're going to have a nice green weekend. This is going to give us the perfect scenario, the perfect storm for not only a recovery from this fall, but a potential to hit some of that upper liquidity that was left behind when we approached that $24,000, $25,000 level a couple of months ago. So I am looking for that move for this weekend, and I'm anticipating that move. So that's why I'm going into longs and not shorts from this point here. However, that being said, I want to make sure that people know that I'm talking about local moves, short-term moves, because overall, I do believe that we are going to be heading much lower. And this is a thesis that I've been working on from the very beginning of the year. I have not let that, I have been following that same rule that we're going down. And every time people fight me and tell me they've been fighting me since the $40,000 level, the $30,000 level, the $20,000 level. And I've heard every excuse. It'll never fall below 30,000 because we've never been below X amount of trades. And then when we drop that, then they came with we'll never go down to 20,000 because the simple moving average 200, we've never traded below that. So that'll never happen. And then we broke it. When we broke that, people keep on moving their goalpost. And the reality is that it's not that difficult to see where we're heading. And I'm going to make it real simple, guys. I'm going to go to a different chart only because I have a lot of my notes. My trading chart is on here. So I'm going to get a chart that's clean with nothing on it. And then what I'm going to do is I'm going to actually remove the indicators, because I'm going to make it real clean, real simple. We'll go to the weekly time frame. and we are going to look at the fibs, because the fibs is something that I like to use for retracements, not only for local time frames but also for macro look, because there is a pattern that markets like to follow, and these patterns are identified very well within that Fibonacci retracement tool. So if you take the all-time high that we had at $69,000 last year, and you take the all-time low, which was the COVID low, and I'm going to change this to 3850.
I think the chart didn't change yet, BC. We're still seeing the old one.
Oh, really? Okay, so let me see what I can do here. Let me do this. Let me do a stop share, and let me turn off my other monitors, and
okay,
and then I will do a new screen share. Let's see here. We'll go here. All right. Ignore that beeping; it'll go away. That's my monitor saying, "Hey, you unplugged me. I'm going to turn off." Okay, let me see. Okay, so here's the one. Okay, you should see my screen now with the Fibonacci tool.
Mm-hmm.
Okay, so here we have, guys, we have the weekly time frame on Bitstamp, which is one of the oldest exchanges with the most data. So I like to chart on that. And I'm going to do my quick analysis on here, no indicators, just using the simple Fibonacci, and show you some correlation. So if you look at the low here of the COVID low 3850, the high of 69,000, we have fallen. Oh, let me reverse this here, because I was doing a different study before. So let me just reverse the fibs. There we go. And we have fallen, and we double tapped the 786. It's a great level. It's a great Fibonacci level. There is no reason to discount this level and say that it couldn't start bouncing from here. However, the reasoning that I don't feel like this is the bottom, and I could be wrong, is because I like to follow previous patterns. So for instance, if we go to 2017, which is, the most memorable bull run besides the one we just finished having, that everybody still likes to reference, which they should, because there's a lot of data within that bull run that allows us to then trade and utilize that data. Let me get rid of this magnet for future runs. Let me get rid of this magnet here. Hide indicators. Boom here. Okay. So if you take the high of that run, and you take the low here, you can see here where we fell right into 706 on that big retracement. Now, this is where I have a hard time, where people say that this past bull run, that this 50%, that this capitulation from $40,000 was the final capitulation. And here's where this is why I discount that. If that is the capitulation, that capitulation happened at the 50% marker. Now, if you go back in history, a last capitulation doesn't happen this high into a retracement. This is the 0.50. This is not where a capitulation happens. So, and I'm going to prove it to you. You don't have to take my word for it. Look at the data, look at the facts, and then let that determine if I'm correct, if I'm analyzing this correctly or not. Look at the way we came down into the 706 level here, and we bounced off of here. We had a nice little dead cat bounce here, another dead cat bounce here, and you notice how these dead cat bounces got smaller and smaller and smaller. Basically, we have this equilibrium pattern, and we have this, I like to call it, a coils up, and then it got really tight like a spring, just to give us that final capitulation. You notice the final capitulation happens at the bottom of the consolidation, at the bottom of the drop. Doesn't happen up here at the 0.50. We dropped here to 0.50 in 2008 as well, and we bounced off of here, and we fell again here, and yet this here clearly marked an equilibrium pattern right at the bottom, what we thought was the bottom at 6,000, just to get a 50% drop in here. Now, during this move, what happened to the alt? And this was an argument that many people had back in 2018 at the $6,000 level, and they said that all the alts had already dropped 90%, and there's no more room to go down. Well, guess what happened? After we dropped 90%, we dropped an additional 60% on the alts. So the alts definitely have more room to fall. So leaning on that theory that we've hit the bottom because alts have already dropped 90% is the equivalent to being here on the current market. It's the equivalent of being at $6,000 and saying that the bottom is in and that the alts can't go any lower. And this is what basically is what's in store. Now let's fast forward to the 2019 drop that we. Let's go to 2019. Did we do something similar? Actually, we didn't. We did something exactly the same. Look at that. Drop right down to 886. Again, that drop to 886 is a level that institutions like to buy. Institutions don't buy 50%. Institutions don't buy 618. That's retail. Institutions buy 88%, 88 cents on basically 15 cents on the dollar. So they will buy 88% discounts. And that's exactly where it caught that support. Look at these massive wicks. These are big buyers coming in. This was not Twitter buying. This was not your mom and pop and Uncle Larry buying. They don't buy this. They buy those stocks. These are massive institutions coming in and basically knowing what value is and buying into value. Now, I'm going to do one more study even further down to see if, because a lot of people like to argue, well, this here is there was a lot of people, a lot of mainstream media. Well, you know what? There wasn't a lot of mainstream media back in 2015, 2014. So let's see how price behaved back then. Was it similar? Let's see. Let's see how price behaved back then when it wasn't in the spotlight. Did we respect 0.886? Again, don't take my word for it. Let's take a look. What do you know? Look at that. Exactly the same. So when they try to discount that 886 is not valid, I show them 2019, I show them 2017. When they come at me and say, oh, well, it wasn't, that was, you know, the mainstream media was involved. There was a lot more bullishness. Well, okay, I'll take it further back. I took it back another 4 years, 5 years back. And when we get back in here, look, the exact same pattern, the exact same capitulation, 50% capitulation towards those bottoms. Look, this fell to 706, 50% capitulation. Exact same thing. Consolidation, and then off we go to a new bull run. So it's hard to look at a prior price history and then go fast forward till today where we're at here and then tell me that this time it's different. When in reality, nothing has changed. Just because mainstream media or just because there's wars and recessions and unemployment, those are something that will happen in a cycle as well. They're always around. We always have conflict. We always have issues. But one thing that doesn't change on the charts, including broader markets, because remember, guys, all of these tools that we're using here, they're not from crypto. They're from broader markets. And I've done the studies in broader markets using the exact same tool set and rule set that I do for crypto. The advantage that we have in crypto is that crypto is much more accelerated. So all of these patterns happen in a much quicker time frame where you don't have to wait 10 years to see a retracement to 886. All you have to do is wait 2 years and see that happen in crypto. So we get a much quicker education in how these tools and how to utilize these tools. So when you fast forward to today and I look at this level here, 786, I have a hard time buying into the fact that this time is different. And I'm not going to do that because I did that in 2016. I clearly recall being in 2016 and hearing people talk about it so much that it convinced me. Yeah, you're right. It makes sense. Everything dropped 90%. How could it drop any more? We've already dropped. We've been here for 5 months. It can't possibly go any lower. And then it sucked the wind out of the market. So I'm not going to fall for that same exact I'm not going to put myself, better said, in that same scenario. I'm going to be patient. I'm going to wait. I'm going to follow price history. All the other bull markets that we've had have behaved the exact same way. And I've done studies of that on YouTube. And I went back to the 5 bull runs that we've had, and they all played out the same. So there's no reason for me to change the rules at the bottom of the game here. I'm going to be patient, and I'm going to be scaling in. Now, there is an argument that I do like, and I'll admit it's very valid. And let me tell you that, and it falls also within the 886. Remember, guys, when you look at the Fibonacci and you see these spaces in between these Fibonacci levels, 886 doesn't mean that it has to hit this line and that's 886 and nothing else above it is not 886. 886 is this space right in here, guys.
Mm-hmm.
The moment it cracks this line, you are in 886 territory. So you could highlight this here, and you can call it. As a matter of fact, I'm going to do that. I'm going to highlight this for a second, and this, anything inside of this box is 886. You can either wait for it to touch that line. You don't have to. That's being, I think, really aggressive. And that's taking a lot of chances in bottom fishing, which I don't like to do, but I'd rather just scale in somewhere in here. And I think a very valid area to scale is this area right here that I found some confluence. Now, when you're looking for areas of support and you're looking to the left, the best thing that you can do is look for prior resistance. That is normally going to be your first area of support. And I've heard a lot of people talk about $14,000 as being their bottom. And I can go with that. I can go with that for a couple of reasons. The main one, I'm inside of 886. Number two, look left on the chart. Look at the way we find support, which is the peak of the 2019 run. And if you zoom into the 2017, here we go. And you look at that neckline on this market structure here. Fits really nicely, very nicely. So I can easily say, you know what, 14,000 could be a reasonable bottom. So for my trading plan, I am definitely going to start scaling inside of this area here. I'm going to dollar cost averaging down. And in the event that we go lower than 886, as some people are calling, I'll buy some more. And here's something that I want. To show you, Pi. You've seen me use this quite often. The VRVP, the volume profile indicator. And here's something that's really interesting. Look at this. Why is it not showing up on the chart? It's on that. Oh, I have the indicators turned off. Okay, there we go. All right. So this study here, guys, this is called the volume profile. And what the volume profile takes into account is everything that's in my chart. So it's looking at all the profiles, looking at everything from the COVID. So see right here, my cursor is, this is the COVID. Let me turn off the volume indicator here, the bottom. Okay, so you see this red arrow, guys, not arrow, but the red candle. This is the COVID fall. So I'm going to move this right over here. So now this is taking all the data from here to current data and giving me where the majority of interest is inside of this price action. And you see this red line here, Pi? This is called the POC level. Which means point of control. That means that this is the one specific area where the most interest is for Bitcoin. Buyers and sellers have stepped up the most volume here. And you know where that falls at? $10,640. So people that are calling for $10,000, you know what? They have a valid case. They have a valid case not based on hopium because they want to buy cheap, not based on their gut feeling, not based because their grandma had her hip was hurting and gave them that number. It's because you can find relevant data, TA, that's backed up by facts and has been proven to work time and time again. And this shelf here, you see this big candle that sticks out here. This is what we call a shelf. So when it hits this shelf, you tend to find a lot of support, and that shelf actually lines up exactly to 886. So there is a scenario for 14, for 886, and for even lower than that. But again, it's too risky to try to catch those bottoms. In my opinion, the way I'm going to trade it, I'm going to trade it anywhere inside of this shaded box. I'm going to be happy with it. But I'm not going to start buying Bitcoin until I hit that shaded box. Other people have started. They are fine buying it at 20,000, and there's nothing wrong with that. Nothing wrong, because in hindsight, when Bitcoin, and I do believe that Bitcoin will hit $200,000 in the next cycle, that no one's going to care that you bought it at 20,000 or you bought it at 14,000. You now own Bitcoin that's worth $200 or $250,000. So, you know, when in the broad scheme of things, you're kind of splitting hairs. I'm doing this just because my own quirkiness doesn't allow me to buy. I don't want to fall for that same stuff that I fell back in 2018. Worst case scenario, what's going to happen, guys? I got to buy it a little bit higher. We crack, in my opinion, if we close above the 200 EMA, we have reversed the market, and this double bottom market structure is valid, and I'll start buying. That means I'm buying Bitcoin at $6,000 more than I anticipated. That to me is an acceptable level. What I don't want to do, I don't want to buy Bitcoin and it dropped 50% in value. That is something that I feel with the funds that I have, and with the trading plan that I have, and with the amount of money that I am planning to pull out of the market, it would really put in a dent into my overall plan, and this fits my plan much better. Here, I'll have to be more aggressive with my trading, maybe start using some leverage, but I wouldn't mind using leverage in a bull market when I'm doing longs, because the probability again is much higher that you're going to have success as long as you keep those leverages within reason, and you keep those stop losses very, very tight. And that's basically what I would have to do if I get caught on the wrong side and I'm incorrect in my analysis and we don't fall. I just got to be more aggressive in the future. But this is how I'm playing it, and this is how this is not something that I want other people to feel like they have to follow me. It's just simply, like I said in the beginning, it's just an idea that I like to share and my views on how I see the market.
No, I think that's a great analysis. And it makes a lot of sense. I have started to buy under the 20K mark. I've slowly started dollar cost averaging, but I do think that we're gonna go down further. But I wanted to start there because I felt pretty comfortable in that price range. So I did start.
Okay,
Actually,
good. So, yeah, your idea about dollar cost averaging, I think, is a very safe way of doing it, because I did an example before. If you buy one Bitcoin at 20,000 and you buy one Bitcoin at $10,000, and you buy the same Bitcoin, that Bitcoin that you bought at 20,000 no longer becomes a Bitcoin at 20,000. It obviously comes at averages down quite a bit, and the more you buy at the bottom, the more that $20,000 Bitcoin becomes lower and lower. So you get to dollar cost average, and that's the importance, and that's the benefit of dollar cost averaging. Again, it's something I should do, honestly, but I'm very stubborn. I'm old, and you get stubborn the older you get. So I am going to stick to my plan and see if it works out. And if it doesn't work out, there's going to be more bull runs, more opportunities in the future. No big deal. But I really want to stick to that rule set. And the reason I want to stick to that rule set too, guys, is because I think in trading it's really important that you have a rule set.
yes.
And if that rule set has worked for you more often than not, and you've had good success with it, don't change it halfway through the game to try to make it fit your bias at the time, because more often than not, when you change the rules halfway to the game, it doesn't work out your way. And that's happened to me too many times, and it's backfired on me too many times. So if it costs me $6,000 per Bitcoin to stick to my rule set, then so be it. I'd rather say, you know what, I stuck to my rule set. It didn't go my way this time, but it's gone my way more often, then I'm going to continue to stick to that rule set. So that's kind of the reason I'm really not doing it. I'm trying to stay as disciplined as possible with my rule set.
No, and that is so important, because I've done the same thing. I've started with a plan and then things weren't exactly going as I thought. So I'm like, okay, well, I'll just change this around and I'll just move this here, and I'm going to get rid of my stop loss here. And it mostly has always blown up in my face. So I told myself I was going to accumulate and start dollar cost averaging after Bitcoin went below 20K. So when it did, I said, okay, well, we're going to start. I didn't throw everything I have in, but I started to take a little bit. I did good. I didn't buy any of it at any other levels, because I knew we were going to be going down more, and I just patiently waited for that below 20K. So
okay. All right. Awesome. So what did you want to cover any altcoins? Has anybody sent over any requests on altcoins? I know I get the most requests I get is for XRP. And
yes,
it's funny,
XRP and ADA.
I just did. Yeah, those two. It's funny. I did a show yesterday with Martiverse. Those are the two most popular coins that they requested. And I did an analysis yesterday. It was really cool to see it play out. I love watching when you do an analysis, then you see it a day or two later how it plays out. So I want to share. I shared this with shared this on Twitter earlier. So we were doing when I was doing the interview, we were basically right here, right on this candle right here, and I was explaining that I like using a harmonic pattern, as you know from being in my Discord. Harmonic patterns are something that I like to follow, and they tend, again, to play out very often. So utilizing the harmonic pattern, despite the fact that we dropped, that the drawdown was so severe, and what do you know? We dropped right into 886. even though it was so severe, the harmonic pattern still is was still valid. And look at where we topped off today. We topped off less than 1% away from the target of the harmonic pattern. Now, that's not to say that when I draw a harmonic pattern, it has to hit the exact tip. Somewhere inside of somewhere in this area is fine. But the fact that we went so close is just, you know, just a little extra nerd. I nerd out when I see stuff like that. And now the biggest question I got when I posted this on Twitter a little while ago, they sent me my DMs were blowing up. What now, BC? What now? And I explained it on yesterday's show that when we complete this, what I'm looking for, like anything else, a little bit of a cool down. When I look for a cool down, guys, just like I mentioned earlier before, when I was trying to find a level for a support level on Bitcoin, I like find prior resistance. So when I find prior resistance, the way we were here, and here, this is a good area for me to say, you know what, the next move down is going to be a consolidation here. Now, when we come down here, we've got two things we're going to look out for. We want to make sure that this is now confirmed, because one of two things can happen. We either sit here and confirm and consolidate, cool off, allow the indicators to reset, or we drop below it, and then obviously that's going to lead to further downside. But the fact that we are expecting the rest of the market to have a little bit more, one more push up to the upside to tap some of that higher level liquidity, there's a good chance that this is going to hit this area of resistance and continue. Now, for continuation, it's going to be very similar. Again, in my book, it'll be another harmonic pattern that I'll be looking at. So when we come back down into here, what I'm going to want to see is probably something like this. And let's see, let's go ahead and clone that. We'll clone that. And again, guys, draw this on you. I did it too many times. Put this on your chart, guys, and then you can follow along. And because there's no data right now, I'm just going to assume that my TA is correct, and then we're going to come down to this level here, and also that we're going to find support, and then we're not going to fall through. So if all of those things meet, my next target for XRP is going to be 60 cents. So if you guys take a moment, screenshot this, understand why I came to this conclusion, why it worked out inside of my target box, and then understand once again why, if indeed we do come back and we hit 60 cents, if these rule sets are met, why we hit 60 cents. I'm going to do a shameless plug. I have a private Discord group that I run, and Pies is a member as well, and she can attest to it. It's a learning Discord. It's not a signals Discord. So I'm not going to sit here and tell you to buy here and sell here. I'm going to teach you how to identify setups. I'm going to try to teach you how to identify market structures, how to think for yourselves, basically. I'm going to give you the tools. I'm going to show you how I think, and you can either adapt how I think by a proven track record, or you can then take my rule set, spin it however you want, take some stuff out and create your own rule set. But at least you have a foundation where to work from. Twitter isn't a foundation. Following some random avatar on Twitter isn't a way to establish a rule set or a foundation into your trading career, or even if it's not a career, if you just want to make it just a hobby, but you want to be successful, you want to make money, you need to take the time and learn, and that's what we're all about. So if you think you need some extra help with that, because you can easily do it on your own. You don't need to pay anyone. You can go on YouTube, and you have the time. There's thousands of hours of information. But most of the people that come to me are people who tap that resource out. I've seen plenty of videos, but I need the extra explanation. I need the extra time and I need to go to the extra level. That's where I come in. You can come in completely raw. I can help you from the ground up, or you can come after knowing some of the basics, and I can get you to that next level. So if you guys are ever interested, let me know. Send me a DM, and you can go to my website and try us out. There's no yearly commitment. You can do it month to month, and quit whenever you want or stay as long as you want.
Yeah, and that website is bleedingcrypto.com.
Yes. Yes.
No, I've learned so much, and it's like, BC said, it's teaching a man how to fish, not necessarily just handing you over the fish. So, and no one is right all the time. So you yourself are going to make mistakes. It's part of trading. You have to embrace it, but you got to learn from your mistakes. I mean, we've all been there, and I still make mistakes, and I just embrace that and move along.
Yep, I do too. We all do. We all do. I don't know any trader that doesn't. And that's what makes us better traders. Every time we make a mistake, it's hopefully something that we're not going to repeat again. And there's some mistakes, guys, that you will repeat again because you followed your rule set. And that's okay. If your rule set gives you the strike rate that allows you to make money consistently, you have to stick to that, which means that you also have to embrace the losses, because if you did everything correctly and you follow that same rule set that puts money in your pocket and it doesn't go your way, it wasn't your fault. You shake it off and you get back on the horse and you try it again. And again, like I mentioned before, if you've had success with that rule set, there's no reason why you can't continue. Just don't change a successful rule set or a successful plan because you fell off one time or two times. Make sure that your consistency is, if your consistency is outperforming your losses, you're doing okay. Do not expect 100% success, because that is unreasonable and that's not going to happen.
No trader can actually say that, honestly.
No, not at all. Not at all.
Do we want to see ADA? Do you have something for that?
Yeah, I don't have, but I can come up with it really fast.
I know ADA is it's been pumped a lot. Lots of people are talking about it, XRP and ADA, and so I know a lot of people want to know good entry for it. And
okay, let's do this, guys. I like doing the weekly time frame. Well, actually, I do have something for here. This is something I mapped out. You know what's funny, guys? This is something I mapped out for my Discord members back on April 12th. I remember that, April 12th. So let's see here. Let me look here. April 12th of this year. Where were we? Right. That was right here. This week right here. So I mapped this out for somebody April 12th. I went through the top 100 coins, and that's why this is so close here. Let me expand this out, because I haven't touched it since then. Let me just move this bar out of my way, coordinates, and just let me move this over, because some time has already, as you can see. There we go. All right, perfect. Now I can see a little bit better. So I'm going to give you the analysis basically that I did back then, and it's still valid in my opinion. Look again, guys. Look at my favorite level, 886. I'm going to zoom in because, again, I know I'm going to sound like a broken record, guys. Institutions like to buy 886. Look at this bounce. Let me measure this bounce. This is a 55% bounce right off of 886. I mean, this is not a coincidence, guys. This is the type of stuff that I try to drill into you. But unfortunately, so many people have an unrealistic view of the market, and they're full of hopium because they like to listen to these avatars on Twitter that are looking for just clickbait, and they fall for it, and they don't care about anything else but how do I get people to click on my profile. And that's unfortunately it's a disservice to people trying to learn. Now 886, beautiful bounce. Now my buy zone, I put it under 886 in case you guys are wondering. And this is why I put it underneath. Normally I told you I like to buy 886, but I also like to find confluence. And here is my reasoning for that. I'm going to show you, rather than me telling you, let me show you. I use a tool. Remember, guys, all of these tools that we use them for confluence. We can have a theory, and we can do an analysis, and we can probably draw a conclusion off of simple support and resistance, or the Fibonacci. But when you understand trading and through the years you pick up different tool sets that have helped you find that confluence to reinforce your idea, it's very helpful. So in this case, 886 was not my buy zone, but the volume profile tells me why. Hopefully, just by putting it here, you guys can see what I'm talking about. You see the shelf, guys, that I was talking about? That's why I put my buy zone right on top of this shelf. Because what happens here, guys, if you look to the left, you see this candle here? This candle, coincidentally, was 886 zone. What don't you have inside of this candle, guys? What don't you see in this candle? You know what it is? You don't see any structure. All you see is parabolic move here. A parabolic move doesn't have any support, any resistance, doesn't have any type of market structure. And what price action tells us that when we're going up or down, we're going to either fall really fast or we're going to pump up very quickly if there's no type of structure. And look to the right. Look what happened. Exactly what happened. Look how far and how hard we fell. And think about this. This is the weekly time frame. 1, 2, 3, 4, 5, 6, 7, 8 weeks of falling. And what a coincidence. Look at this. No structure to the left. So even though 886 is my choice of Fibonacci level to reload, I decided to move it further down because look at this. Structure. Look at this. Volume profile giving me the shelf. And even if I want to put some stink bids on this point of control, that's 0.07 cents. So there was a lot of indicators here going against my 886 that I couldn't ignore, and they piled up in favor of not using 886 as an entry and utilizing a lower bottom target. However, had you bought at 886, you wouldn't be in a bad position because you'd be basically break even right now. You'd be in the same break even. Now, if Bitcoin does follow my analysis, well, I'm not going to call it my analysis because it isn't mine. It's something that I'm interpreting from the market. So if it follows how it's followed in previous cycles, that's a better way of describing it. If Bitcoin follows the same cycle that it has before and it drops further down, it drops another 50%.
50%, yeah.
Level, and that's going to cause alts to drop about 50 to 60%. Let's measure it. What is that? Where does that put? Look, I'm not making this shit up. And you can't say I rehearsed it. But look at that. The numbers line up exactly. 60% off alts. What did I tell you in the beginning when I was doing my analysis on 2018 when the altcoins dropped 90%, they dropped another 60%. And look at that. Another 60% on another 50% drawdown from Bitcoin. Guys, the numbers are there, the facts are there. You don't have to believe it. My job is to show you why I believe a certain range, and if all the numbers line up time and time again, and you still want to ignore it, that's up to you. It doesn't affect me at all. It's not my money. I have my plan. I've got my money, and I know what I'm going to do with it. Whether you believe it or not, only time's going to tell. And I implore you guys, anybody who's listening right now, this is a good way to actually learn. Take a screenshot of this. Keep this recording handy. Put a post-it note. Put BC is full of crap. I'm going to fact check him 2 or 3 months from now, and put that a reminder on your phone. I challenge you to do that and go back and see if I was right or if I was wrong. If I'm wrong, I have no problem. It's saying, okay, you know what? This one time it didn't play out, but I'm not going to do that until I am proven incorrect. And so far, history is on my side, and I'm going to side on the I'm going to be on the side of history because it has played out too perfectly, and these numbers are lining up again the exact same way they did, and it's too close to ignore and to say it's irresponsible to say for me that it's this time it's different and that we have found the bottom. So let's see what happens in a few months from now. Look back. Some people will call me out, some won't. We'll see.
And you know what's interesting? One of the last times that we looked at ADA, that's several months back now, you had mentioned some of the buy zone as these here. You were like, as crazy as it sounds right now, we could be picking up ADA back, at 5 cents, 6 cents. And here we are.
Here we are. I remember having a discussion with somebody with a member on Sol. Now, Sol, at the time that I was having a discussion with him. Sol here, actually, let me put it up because this was such a fascinating discussion and analysis. Here, actually, I still have it here. It was after this move to the downside, and we were getting this move here to the upside. He reached out to me and said, "Hey, BC, what are your thoughts? It looks like Sol is recovering, and I'm thinking of loading up here." Many people are calling $1,000 for Sol, and they were on Twitter. Everybody's saying, "Okay, this right here is the correction. We're going to see $1,000." Yeah, okay. If you want to believe that, that's your prerogative. However, looking at this market structure, looking at the way we moved up, looking at Bitcoin and how toppy it looked, I had a very different opinion on it. And I told him, listen, you've been a member of my Discord group for a number of years now. You know that we instill, better said, I beat it into you, 886, 886, 886, because it's a proven level. Now, keep in mind, guys, this was here. This was last year in December when we're pushing up. And actually, it was this candle. Because I remember him saying, BC, this is a second week. I think we're going to go all-time high. There's a lot of guys that have 500,000 followers, and they're saying $1,000. And I'm like, okay, if you want to buy it, buy it. But let me just at least do my part in telling you what I think. And I said, how many times have we told you guys that once a coin starts to pull back, you want to place your bids at 886. Yeah, I know, BC, but this time it may be different. Okay, look at this, guys. Almost a year later, not even a year, 9 months later, look where we hit. Literally right on 886. Look at that. Look at that candle. We even dropped below 886, but we reclaimed it right away. Look at that, guys. Consolidation. We even pushed up here and came back down to 886 again. Guys, I don't make up this stuff. This stuff is proven. Everything that I tell you and everything that I show you, you don't have to believe me. As a matter of fact, I always encourage my students not to take my word for it. Fact check me. Go back test what I tell you and see if you can find correlations to prior market cycles and see if I know what I'm talking about or if I'm just making this stuff up. And I'm yet to have somebody come back and say, no, BC, 886 is full of crap. It never hits. It hits almost every single time. And again, people want to tell me that this time it's different. I love it.
Those are emotions. They tell you wrong.
Yes. Unfortunately, those are emotions that people have because they don't understand how markets work. As you know, I teach a master class inside of my Discord. We teach a master class, and the very, very first thing we teach is the psychology of trading, because that is the actual foundation of your education. Your role as a trader moving forward, when you decide to take on that role and you commit yourself to being a trader, you cannot do anything until you understand the psychology behind trading. Once you understand that, everything else will fall into place. Because if you learn technical analysis first and not the psychology, you are wasting your time, because your technical analysis will not work because you won't have the discipline to follow your rule set. No matter how good you understand TA, you have to understand the psychology behind it. That is the number one thing. And unfortunately, look, guys, I can pull up any chart and show you 886, and there are still people going to believe that that's not going to happen this time. I can't help them. I can't help everybody.
No,
unfortunately.
you do have to go against how you feel, and it is hard. It
Yeah.
takes training. It really does.
Yes. It
And
does.
sometimes
It
it
does.
takes just walking away from the charts. Like seriously, like okay, no, I don't think this is gonna happen. Oh, if you have too much emotions, don't trade. Seriously, don't trade.
I've been training for years now, Pi. Do you think I fall for emotion?
No, I think we've been burnt enough, but
No, actually, I do. Sometimes it gets away from me. It's a
yeah,
constant battle. It really is. If a trader tells you he trades with no emotion, I have a hard time believing it. If he can do it, great. But personally, myself, I am a very passionate person, and I love what I do. First of all, and I find this fascinating. This is something that I don't get tired of. I do it 7 days a week. I absolutely love what I do.
he
And
does.
I still get caught up. I still get caught up in the emotion sometimes when I'm in a trade, and it's going good. I'm excited. I'm happy. And when it's not going good, I get not upset. Well, yeah, I'm upset. I'm not in a good mood. I'm trying to figure out what I did wrong. You're going to have emotions, in my opinion, throughout trading, and sometimes they're going to come back and they're going to bite you in the butt, and you're going to take a loss because of those emotions. And it's a constant struggle and a constant battle. But if you identify those faults and those attributes, it's going to be much easier to overcome them and combat them, and don't allow them to become something regular in your trading. So there's going to be a lot of things that you're going to find within yourself as you're learning to trade that are bad habits. And as long as you identify what those are, they may be something they're always going to come up and creep up on you later on down the road. But knowing how to identify and correct them and try to block them out and not allow them to creep up is something I think is going to benefit quite a few people. And again, that's the type of stuff that we like to teach in my Discord. So if you guys are find this useful, give us a try. Give us a try.
Yep. And yeah, I mean, that is so true. It's recognizing. I guess it's all about awareness, right? If you recognize
Yeah,
there's a FOMO in you, something
yeah.
that's making you just want to get into a project and it's
Mhm.
at an all-time high, you should probably, if you recognize that, then you can probably walk away from it without dumping all of your money in at the top.
Absolutely, absolutely.
Well,
Absolutely. I keep on going back to this chart, Pi, because I love Ethereum, and I'm looking at this just set up this. She broke out of the double top here. Had a little deviation from the actual market structure. However, it's still playing out, and I'm looking for hopefully an entry into this trend line. So far, it's still on a downtrend. It was looking like it wanted to turn around in some of the lower time frames, but we keep on putting bear flag breakouts, and she's currently working on a bear flag very similar to Bitcoin. So I'm looking for another entry. I have been scaling in on this one because I do anticipate a much bigger move. I've been listening and following Castillo's. I'm fascinated with Castillo Trading's NPOC levels, and they've been hitting very accurately. And I like that. I like seeing that consistency. And I understand his NPOC levels from those volume profile indicators that I was talking about before. But his NPOC levels are a little bit different. He does different ranges. He uses a fixed volume profile, and but they're really good. They're really accurate. One of the things, guys, that I want to stress is there is a limitless amount of information out there, and it's impossible for one person to research all of it. So what I like to do personally is I like to lean on my colleagues. I like to lean on my peers that have looked into a certain tool, a certain theory, a certain project, and if they have a consistent track record, if you trust them, if they've proven themselves, it makes it much easier for you to do your job, because then you can then use them either as a validation or as a time to step back and see if your theory is completely different than his, but you trust him as a very respectable analyst with a good track record. He may give you an insight that you missed in your own analysis, and then you have to, reassess what you're looking at. Or you may be correct and he may be incorrect. But the point is, don't be embarrassed and utilize your peers that you find during your trading career that you find helpful and lean on them. Give them credit. Send them a shout out. I'm always sending shout out to people who help me out because I don't feel like I'm in a competition with anybody. I feel like I'm in a collaboration with people, and I want to make sure that I thank people. If people have an indirect or a direct responsibility, not responsible, but what do you call it? An effect of how I trade and put money in my pocket. I want to make sure that I give them the credit that's due, and I want to thank them. Hey man, I looked at your analysis on here. I missed this. This was a great level, and I played it. I used it, and I made money. I appreciate you. Maybe send them a tip. I like doing that because I think that's the right thing to do. We learn. If we keep an open mind and we don't feel like we know it all, we can really grow as a trader. If you feel like you know it all, then where's the room? How much room do you really have to grow if you think you know everything already? You're not going to really apply yourself.
No, you're already perfect. You're
you're not interested in learning. I'm constantly on YouTube, Pi. At least one or two YouTube researches I'm doing a day on different tools. I may not use them, but I want to know how they work because I may use them later on, and I'm constantly learning. It never stops. I'm always wanting more and more information, to be honest with you.
There's so much to learn when it comes to crypto and trading, and the space is evolving all the time. So if you don't, it's easy to get left behind too. So I can understand.
Absolutely.
Well, I think this was really good comeback, BC. I mean, we covered like four pretty major things that are going on in crypto, what everybody wants to know: Bitcoin, Ethereum, ADA, and we even looked at Solana, and we got XRP in there. So those are actually pretty major things. We looked at lots of trading tips and tools, and I think if anybody has any questions for BC, or if you want any other suggestions for coins for next time, we're gonna try to do this more frequently again now that the summer is kind of behind us. So we'll be able to do that as long as both of our times match up, right?
Yes, yeah, no, I love doing this. To me, this is my sports. Like, I don't follow regular sports, but when I see my friends, get together, all they do is talk about sports. What do? All we do is talk about crypto because that's what we love about. That's what we're passionate. This is our sport. And I think this sport is better than other sports. You know why? Because it puts money in our pockets. When I'm watching my friends watch football and they know all the stats. They know everything of every player down the, they know their whole entire career. And I think to myself, that's such useless knowledge. Because if you apply yourself and you utilize that, if you can retain that much knowledge, can you imagine what type of trader he would be? If he would know how every tool would work, he would be an amazing trader. So I like to try to mimic that type of passion to what I do now, because this to me is my sport. This is like horse racing, watching horse races. Look at those panels go. Look at it go. It's passing the 9 EMA. It's breaking the 200 EMA. And I just get a kick out of it.
I know you do. I know you do. And you have to. You got to have a hobby that makes you money. That's one of the hobbies you got to have.
Yes, absolutely. Yeah, and I don't think I don't think we could put the type of hours that you and I put into this space if we didn't love what we did. If we didn't, there's no way. It'd be impossible to be able to muster that type of energy into something that we are just not happy with or that we don't find interesting.
Yeah, exactly. No, you really can't. And even for me, doing all the other things that I do, but yeah, I still take the time to do these videos and to try to help out. And honestly, it's so crazy. I wanted to tell you this, BC, because my cousin, I ran into him at one of our family weddings, and I didn't even know, like, that he even was in crypto, but he pulls me off to the side and he's like, "Hey, I found your YouTube channel. I didn't know you had a YouTube channel. And you had that guy. He was breaking down the technical analysis. What was his name? Oh, Bleeding. He's so good. His analysis is, I mean, I was blown away. I'm like, wow, I
That's
had no idea
awesome.
that so he's
That's
been apparently
awesome.
following us on YouTube. So that was
How
pretty
cool is that?
motivating.
How cool is that? That's awesome. I love
Yeah,
it. I
it
love
really
it.
made me. I wanted to tell you that. I'm like, that really made me
Thank
happy. I'm
you.
like, so
Thank you for sharing that. That's really cool. It's really cool because you know what? I remember being on that other side when I going into the space and watching my the guys that I respected, watching crypto news, and then watching the chart guys and listening to them and just thinking, man, these guys just one day I just wish I could learn to identify even just one of the things they're talking about, and because it gets overwhelming. There's so
yeah.
much information that you don't know where to start, and you just have to dive in and then start from someplace. So when you are now on that other side helping somebody else understand technical analysis, it's a good feeling. It really
Yes,
is.
it really is. And you're helping a lot, and you're definitely helping even my family members. So that that makes me happy.
Good.
Well, BC,
Thank you for
thank you
sharing
so
that. I
much.
appreciate
Oh,
it.
you're welcome. Thank you for your time today. We've been on here for a while. I know people are going to have a lot of information to digest and to take screenshots of so they can go back. And even I encourage you guys to go back and look at some of the old videos where we did talk about ADA and some of those, because we're hitting some of those price ranges now. So
Yeah.
it's really
Yeah.
cool to see it play out. It really is.
Yes. Yes.
All right, BC. Well, thank you so much. It's good talking to you. I really
Good talking
appreciate
to
it.
you.
We'll let you
I
go.
appreciate you. Have a great weekend.
You do the same. Enjoy it. We'll talk again soon. Bye
Bye bye.
bye. Okay, you guys. So that was BC, Bleeding Crypto. Please give him a follow on Twitter. It's at Bleeding Crypto. And if you're now following me, I'm at Piece of the Pie. I thank you so much for joining us today. I hope you learned lots of valuable lessons on technical analysis and why it's important to be able to separate what a project is doing and what the price action are, because they are two separate things. You need to be able to pull those apart because they don't work together. A project could be doing fantastic things in the back, but the market makers are the ones that are making the price action happen. So we need to watch out for those certain levels, 886, and we need to be able to identify the patterns by looking at the history and being able to put that in and foreshadow it for the future. So anyway, I hope you learned something. I hope this was valuable information. If it was, give this video a thumbs up. If you're new around here, go ahead and subscribe to the channel for more crypto content like this and crypto news and crypto reviews and all kinds of things. So I appreciate it. Oh, and AMAs too, of course. I appreciate your time, guys. This is Piece of the Pie Show. My name is Pi Patel, and I will see you in the next episode of Piece of the Pie, where I'll be helping you get your piece of the pie. Till next time.